For tax purposes, travel expenses are the ordinary and necessary expenses of traveling away from your home for your business, profession, or job that are not lavish or extravagant. I'm Gabriel Velez, partner at Tehrani & Velez, and we're a tax and accounting firm based out of Irvine, California, working primarily with small businesses and real estate investors. And today I'm going to be talking about travel expenses. For business owners, the distinction between traveling and commuting is a big one because travel expenses bring with them special rules for transportation, lodging, and meals that are more generous than normal. Travel expenses can include things like airfare, rail fare, taxis, meals, lodging, laundry expense, telephone, tips paid, and much, much more. So, what is considered travel? Well, in order to determine if you're traveling, you first have to determine what your tax home is. Your tax home is your regular place of business, and that's regardless of where your family home is. It's important to note that the travel between your family home and tax home is considered your commute and is not tax deductible. And it doesn't even matter what distance your commute is, it's just definitional. If you have multiple places you regularly work, your tax home may be the place where you live, which is awesome because that means you're always traveling. Or you may be considered an itinerant, which is not so great because as an itinerant, transient, you're never considered to travel because your tax home is wherever you set up shop, an important distinction. Generally, your daily meals and lodging are non-deductible personal expenses unless you're considered away from home for a period of substantially longer than a normal workday. There's also this thing called the sleep or rest rule that states that travel away from the tax home must be of such a duration or nature that the round trip cannot reasonably be expected to be completed without the taxpayer or employee being released from duty or otherwise stopping the performance of regular duties for sufficient time to obtain substantial sleep or rest. Essentially, that means your job duties require you to be in a location away from your tax home for more than one working day. If you are away from your tax home and you meet the sleep or rest rule, then for tax purposes, you're traveling. The cost of getting to and from your destination and the cost of moving in and around your destination is transportation. Your airfare, train fare, bus fare to and from a travel destination is fully deductible provided the trip is primarily for business. It does not have to be 100% for business. Conversely, transportation in and around your travel destination is only deductible for the time that the trip is entirely for business. This type of transportation includes taxis, commuter buses, and airport limousines you take to and from the airport or train station and your hotel. It also includes those costs incurred for moving between your hotel and the work location of your clients or your business meetings or your temporary work location. Next, we'll be talking about meals while you're on your trip. As with meals in or around your tax home, travel meals are generally only 50% deductible. The idea behind this limitation is that you would need to eat regardless of any business motive or distance from your home. You have two methods for figuring out your business meals. One is by using the actual cost method, and the second is the standard meal allowance. The actual cost method is pretty self-explanatory. If you use this method, you must maintain records of the actual costs incurred, i.e. receipts, location, etc. If instead you choose to use the standard meal allowance, you get to take a deduction based off of the per diem rates that the IRS releases on an annual basis. The notice the IRS issues gives a different per diem rate for high cost localities and low cost localities, so you have to check it out. Even if you use the standard meal allowance method, you still have to keep records proving the time, place, and business purpose of the travel. It's also important to note that if you're going to give your employees a per diem payment, instead of reimbursing actual expenses, you are to deduct the lesser of whatever you paid them or the amount the IRS notice allows. It cannot be more. The last thing we'll be talking about in this section is paying for a place to stay while you're away. That's lodging expense. Generally, only lodging expense while traveling away from home are deductible. However, expenses incurred for lodging while not traveling away from home can be deductible if they are in connection with carrying on a taxpayer's trade or business, taking into consideration all the facts and circumstances. When you're traveling, you're typically only allowed a deduction for the days you're actually working, though there are, again, exceptions, like if you're working 2 consecutive weeks with a regular weekend off. Hey everybody, thank you so much for watching our video. If your business is in the greater Orange County or Los Angeles areas, and you're looking for a tax and accounting firm that truly understands small to medium-sized businesses, please give our office a call. Otherwise, if you just like our content, please like, share, subscribe, or comment. Thanks again, and have a profitable day.